Fathom's forecasting tool frees you from complicated spreadsheets while enabling you to create robust forecasts with actionable models. A Fathom forecast not only provides you with projections, it also assists with making decisions. As your financial data updates in Fathom, it feeds into the forecasting tool, creating a living forecast that remains up to date and relevant as economic conditions evolve. You can quickly incorporate changes in business strategy with micro-forecasts and experiment with scenarios. The business roadmap shows stakeholders how projects, hiring decisions, and investments in capital influence cash flow and a business's success. Fathom's forecasting tool also integrates with reports, so you can share your forecast and communicate strategy with stakeholders. A Fathom forecast is more than a table of numbers. It is a decision-making tool. When you first create a forecast for a company or consolidated group in Fathom, you're taken through onboarding to set up your forecast. All the onboarding options take you to the same forecasting tool. Your chosen option does not limit your forecast. The custom forecast onboarding takes you through a few options to set up your forecast calculations, loans, depreciation, and taxes. Quick Start allows you to jump into forecasting immediately, with Fathom calculating the best options for your forecast based on your historical financial data. You can also use Link to Budget to bring your imported budget into the forecasting tool. Once you've completed the onboarding, you'll end up in the main forecasting grid, where you can build out your forecast baseline. If you need to add or edit any default accounts or taxes set up during the onboarding process, or turn them on for specific accounts, you can do so in the forecast settings. You can also hide all accounts with no results and change the layout of the profit and loss. You can scroll to the left to view a year's worth of historical data, allowing you to sense check the forecast and identify any calculations that need to be changed. A gray background lets you know that you're viewing the business's actuals. Scrolling to the right reveals up to 3 future financial years of forecast data on a white background. In this case, we're forecasting for a SaaS company, or a company selling software as a service. However, companies in various industries can use Fathom's forecasting tool. For this company, we have drivers, or additional data outside of the financials that we want to include in the forecast. You can enter drivers manually into Fathom or import drivers from Excel. Because this is a SaaS company, we have drivers like the projected number of subscriptions and price for each subscription type. For a dental office, you could import the number of patients or procedures and the average charge per patient or procedure. A construction company might import data on the number of workers. With value rules, we can use these drivers to inform our forecast. On the profit and loss, you can change value rules to adjust how your forecast is calculated. It's possible to change the value rule for all accounts within a classification, all accounts under a heading, or individual accounts. As an example, let's look at this subscription revenue account. By clicking into the account, we can see a chart of the account's projected performance. The value rule used to calculate the account is listed underneath the chart. Smart Prediction with linear regression, or finding the line of best fit, is currently used to forecast this account. You can edit the value rule to change it for all highlighted accounts, or create a new rule to only change the value rule for the individual account. In this case, we'll use a formula driver value rule to incorporate the drivers we imported into the forecast. Our subscription revenue will be based on the number of each subscription type multiplied by the subscription price. If we wanted, we could also reference other accounts on the profit and loss in our formula, instead of, or with, our imported drivers. For this account, we'll only be using our drivers. You may have invited other team members into Fathom to work on the forecast with you. When creating or editing a value rule, leaving an assumption note will explain the rule's reasoning to others working on the forecast. You can also include it in a report for stakeholders to provide transparency and ensure buy-in. You do not need drivers to be able to forecast in Fathom. With Smart Prediction, it's possible to forecast the account based on historical financial data. Linear regression finds the line of best fit from the last 3 to 24 months of historical data. Using the previous 12 to 24 months of data enables you to include seasonality as well. Or, rather than the line of best fit, you can use the rolling average instead. Link to previous period brings the actuals or historical data into the forecast, with a possible increase or decrease. Constant growing is helpful if you have an account with a constant amount, like a monthly rental expense. You can also increase or decrease the account by a constant rate or amount. Link to budget brings the budget figures for the profit and loss account into the forecast, with a possible increase or decrease. Applying different value rules across the various profit and loss accounts in your forecast is common. You may also have several value rules on a single account occurring at different points in the forecast. For instance, we only have driver values for projected subscriptions and subscription prices through the end of the following year. So, we can add another value rule to the subscription revenue account for the remainder of the forecast. You can quickly check which value rules are at play on an account by clicking on the account name. Once you've set all your value rules as desired, you'll want to move on to timing profiles. Timing profiles are the link between the profit and loss and balance sheet. They determine which balance sheet accounts are impacted by a profit and loss movement and when. Based on the profit and loss amounts, timing profiles can create movements on the balance sheet without relying on complicated formulas. You can select different accounts for prepayments, accrued payments, and final posting. This enables you to forecast for accounts receivable, accounts payable, prepaid expenses, unearned or deferred revenue, provisions, inventory, and many other balance sheet accounts with timing profiles. Timing profiles can determine when revenue is collected or an expense is paid as cash compared to when it is recorded on the profit and loss. For example, this company has an implementation revenue account because they offer to set up the service for any new signups. Clients pay half the implementation fee upfront, about 2 months before the implementation occurs. Then, they pay the remaining amount when the implementation is carried out, the same month the revenue is recorded on the profit and loss. We can model this with a monthly timing profile. 2 months before the implementation, 50% of the revenue is received as cash. Then, the same month the revenue is recorded on the profit and loss, the implementation is delivered, and the remaining 50% of the payment is received. Use the preview option to quickly audit the impacts of a timing profile on the balance sheet. You can also model bi-monthly, quarterly, biannually, and annual payment plans and expenses with the other timing profile options. Timing profiles are one way the profit and loss and balance sheet interact with and influence one another. Schedules and journals can also communicate between the profit and loss and balance sheet. Schedules enable you to quickly calculate balance sheet movements of differing amounts over multiple months. The schedule creation options assist you in setting up depreciation or loan repayments. They create movements on the balance sheet and can impact the depreciation, amortization, and interest accounts on the profit and loss. Journals allow you to create one-off or recurring balance sheet movements of the same amount. They can be helpful in forecasting movements like dividend payments or an owner drawing money from the business. Journals are also one of the options for forecasting inventory purchases in Fathom. Clicking into a balance sheet account enables you to drill down into its movements and efficiently audit the impacts of timing profiles, schedules, and journals. The profit and loss and balance sheet movements in your forecast combine to project cash flow. You can view future cash flow figures by clicking on the Cash Flow tab. You're able to view monthly, quarterly, and yearly totals for the profit and loss, balance sheet, and cash flow statement. Once you've set up the forecast baseline, you can further strategize and experiment with micro-forecasts and scenarios. While the baseline shows us where the business is currently heading, we want to make stakeholders aware of other possibilities. Micro-forecasts enable you to forecast business events or actions that sit on top of the baseline. They help illustrate how a business decision, such as a marketing campaign or an asset purchase, impacts multiple aspects of a business's financial performance. Let's create a micro-forecast for a new hire. We can start from scratch or use one of the micro-forecast wizards. Enter the salary or wage amount and choose the account where it will be recorded on the profit and loss. Because we set up withholdings taxes on that account, Fathom automatically forecasts those for us. We can see all of the profit and loss and balance sheet movements, including taxes, associated with this new hire in the micro forecast. We'll also purchase a laptop for this new hire. While we have existing asset accounts we could use, we want to create a future account for all employee assets. Future accounts will function similarly to existing accounts in your forecast. Suppose, later on, this future account becomes a reality and is added to the chart of accounts for this business. In that case, you can merge the future account with the newly created actuals account. Once we've added the future account to our micro forecast, we can create a journal to forecast the purchase of the laptop. Then we can use a schedule to forecast the depreciation. This micro forecast is for a sales employee, so we'll expect them to contribute to revenue. They'll be in training for the first couple of months and won't bring in any additional revenue, so we'll add a value rule starting the third month of the micro forecast. We expect them to bring in $4,000 for the first month, with a 5% increase each month. After about a year, they will settle into the role, so we expect their performance to increase by only 2% each month. We can scroll forward into the micro forecast and add a new rule to account for the change in expectations. When we return to the main forecasting grid, we can see the micro forecast on the associated accounts, like the salary expense account. Accounts with a microscope icon have at least one micro forecast contributing to them. By clicking on an account, we can identify the baseline values, calculated according to our chosen value rule for the account, and the values contributed by micro forecasts. You can quickly turn micro forecasts on and off as plans come back into play or are dismissed. The hiring process for this new employee may go smoothly or take longer than initially planned. Because the micro forecast sits on top of the baseline, we can use the business roadmap to effortlessly change when the new employee is hired. You can change the timing of micro forecasts by grabbing and dragging the micro forecast bars. The main forecasting grid will reflect any changes in timing made on the business roadmap. The quick metrics bar sits at the bottom of the business roadmap and the main forecasting grid. You can edit the bar to keep track of the business's most important metrics, like cash on hand or operating profit. If you set a threshold for a metric, Fathom will highlight the periods in red when the metric is not predicted to meet the threshold. Because the quick metrics update as you make changes in the forecast, you can show stakeholders how changes in plans or timing impact critical metrics. You may be faced with questions like, when can I draw money from the business without impacting cash too much? If the new product line release gets delayed a couple of months, what is the effect on operating profit? When should we host the marketing campaign to have the most significant impact on revenue? The business roadmap helps you answer these questions and give stakeholders confidence in their decisions. You can proactively plan for the best while remaining agile and prepared for changes in plans or business conditions. Micro forecasts and the business roadmap help you plan for changes occurring on top of the baseline forecast. Scenarios enable you to experiment with the baseline itself. What happens if revenue decreases by 5%? What if inflation causes expenses to increase by 8%? Creating a scenario allows you to strategize and plan for these possibilities. When you have a scenario turned on, you'll see a marker in the upper right corner of the forecasting tool, so you know you're working in a scenario. In the main forecasting grid, you can change value rules and timing profiles to experiment with different baseline assumptions. The changes will only impact your working scenario, not the primary forecast. You also have an additional baseline adjustment value rule. This rule allows you to take the baseline from the primary forecast and apply an increase or decrease to it. Suppose we're asked if this business can increase subscription prices. We can create a scenario to answer this question. Based on the value rule in the primary forecast, the number of subscriptions and subscription prices determine our subscription revenue. In the drivers grid for this scenario, we can change the driver values for the subscription prices. We'll use constant growing value rules to set new prices. This will only impact the driver values for the selected scenario. So, we've increased the prices, but we might see fewer subscribers as some people cancel and others don't subscribe due to the higher price point. We'll create new subscription drivers to model this. Perhaps we expect 3% fewer subscribers. We can use a value rule to calculate these drivers as the current predicted subscription numbers multiplied by 97%, or decreased by 3%. We'll change the value rules in the main forecasting grid to include the new subscription drivers. So, we've increased the prices and taken into account potential cancellations. By creating a custom Fathom report, we'll be able to report on the scenario and compare it to the primary forecast, providing stakeholders with actionable insights. Each scenario also has its own version of the business roadmap, so that you can create scenarios with different combinations and timings of micro forecasts. You could compare one scenario focused on hiring and building your sales team to another designed around a product release and marketing campaign. Scenarios enable you to have different versions of the forecast, each with its own combination of assumptions and micro forecasts. To return to the primary forecast, exit out of the scenario. You can bring it back at any time. You can also use the forecasting tool to create a budget. The Save Forecast as Budget feature enables you to save your primary forecast or a scenario as the budget for the business in Fathom.